Hello, this is Matt on the Moon Lambo channel, and these are truly unprecedented times and in so many ways. Obviously, what's happening on a global scale when you talk about any aspect of life is completely redonkulous, is it not? But if you're talking specifically about what's happening in the world of crypto, well, take a look at this headline. This kind of says it all. This is from Cointelegraph. Bitcoin is now in its longest ever extreme fear period. Now, think about this. I can't remember exactly how long this metric has been around this tracker, but Bitcoin's been around since the beginning of 2009. And you right now, if you're in crypto listening to this in July of 2022, at the time that I'm recording this latest Moon Lambo Hot Jam, you are living through the worst, most scariest time in crypto ever. Now, still, I say, big picture, it doesn't matter. You know, history rhymes with itself. It doesn't exactly repeat. It doesn't mean that you can't have new lows or new highs on any given metric. And we're experiencing that right now with this fear metric right now. But that doesn't mean that there won't be, something brighter on the other side of this. The question, though, is how much worse is it going to get if it's going to get worse? And some people think it's going to get a lot worse. Some people aren't so damn sure. And some people think it's going to get better from here on out. But the truth of the matter is nobody knows for sure, but it sure is interesting getting perspective from people that track all sorts of different things. So I'm going to share with you some thoughts along the way and perspective from a number of individuals that you may have heard of yourself. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. At the time I'm recording this, XRP is at 33 cents, Bitcoin's at 20,843, market cap for the asset class 954 billion, and Bitcoin dominance at 41.71%. So sideways. Most of what's happened the last few days, it's basically just been sideways price action. Now, you may recall, yes, recently fine Bitcoin did get back into the 19,000s. That was short-lived, and it was as a result of the CPI numbers, obviously inflation through the roof. In case you hadn't heard, we got the official numbers, 9.1%, inflation up 9.1%. Those are the official numbers year over year. Came out just the other day. That's insanity. So crypto's never existed in an environment like this. We have had environments similar to this in the past, many decades ago, at least if you're talking about just that one metric, but crypto's never lived through anything like this. So and that's why I keep saying, like, in many ways, this truly is uncharted territory. But if you think big picture, and this is one of the many reasons I think it doesn't make sense to be scared, is there's still utility to be had in crypto. And so for sure, no matter what, the asset class doesn't go away unless you think the internet's going to stop existing, and then, okay, fine. I don't think that's going to happen. It's just a question of which cryptocurrencies are going to have long-term viability, and that's the interesting part. That's the million-dollar question. You can see here as I record this, there's Crypto Fear and Greed Index at 15 out of 100, indicating that the market is indeed in extreme fear, which brings us to this fun little article from Cointelegraph, again titled, Bitcoin is now in its longest ever extreme fear period. Bitcoin may have avoided fresh losses since falling to $17,600 last month, but the sentiment is on the floor. Now, one classic crypto market mood gauge is showing just how long and hard the average investor has suffered. While crypto market sentiment was already comparable to a funeral before the start of 2022, the subsequent price drawdown in Bitcoin and altcoins produced cold feet like never before. Now, this has been quantified by the Crypto Fear and Greed Index, a tool that takes multiple sources into account to create an overall score of how the markets are feeling. And by the way, I'll just pause to note, there's a reason that in videos where I talk about how the market's doing in price, the vast majority of the time when I'm talking about that stuff, I will at least briefly mention the Crypto Fear and Greed Index. It's worth being familiar with it so that as you're struggling like any other human to manage your own emotions, if you're aware of how silly this is because you stare at the damn thing like I do very frequently, I personally think it just makes it that much easier to not emotionally respond. When you see people, oh yeah, they're down in the extreme fear range again, okay, there they are. And granted, fine, it's the longest time we've ever been down in this range. You will recognize as you keep, if you track it with me and you stay in the space, you will find that at some unknown point in the future, we will be in extreme greed again. And then from there, we're going to be back in extreme fear again at some point after that too. And so you see, if you just recognize that, but you also recognize that the space keeps getting bigger and more money keeps flowing in and utility keeps increasing, bigger, bigger, better, better, then you recognize it doesn't matter if we just keep going back and forth with that particular metric. Look at maturation of the actual space despite that. And so that's the reason that I keep highlighting this stuff. The fact that we've been down here so long, this is long-term inconsequential, but interesting and important to be aware of. It's important to track yourself. I personally believe that. Because I've said this many times. I think the biggest hurdle to anyone achieving life-changing wealth in crypto is themselves. And the reason is emotions. And there can be all sorts of other pitfalls in investing in anything, especially crypto. It's so volatile. I get it. It's risky. Of course it is. But I still think that people are their own worst enemy in this stuff. That's the reason this stuff is important and it's worth focusing on. Piece continues. As of July 15th, fear and greed has spent 70 days in its lowest bracket, extreme fear, marking a new bearish record. The index consists of 5 such brackets, with the others being fear, neutral, greed, and extreme greed. And so a score below 25 out of 100, they go on to note that that's what extreme greed is. And we've been down here a hot minute, right? But it won't be down there forever. There's a 0% chance, so far as I'm concerned, that it will be down there forever. But it doesn't mean things can't necessarily get worse. Take a look at this headline, also from Cointelegraph. Crypto markets need to hit total panic before revival. So says Kevin O'Leary of Shark Tank fame. Millionaire investor from the Shark Tank TV show, Kevin O'Leary, says there's going to be total panic and massive volatility in the crypto markets ahead before the industry swings back toward stronger firms and clearer regulations. Now, despite the fall of crypto finance firms including Voyager, Digital, and Celsius, O'Leary told Cointelegraph on July 13th that we're still missing a real big event seen in previous market cycles before we go back to accelerated growth in the space, stating, quote, "This passion play gets played out over and over again," end quote. Now, some investors have pointed to the current market conditions as a result of over-leveraged centralized finance firms such as Voyager and Celsius. Now, Leary said the problems with firms like those come from idiot managers who needed to be weeded out to make the industry more viable. And here's another quote from Mr. O'Leary. "It's unfortunate that these companies have gone to zero, but you end up with much stronger species," end quote. Okay, so look, reasonable perspective, but is there really going to be one more major drop? Well, I'll tell you what, I was looking at analysis from my fellow XRP YouTuber, the Blockchain Backer, and he put out this really thoughtful and very lengthy thread on Twitter yesterday. And I'm not going to read through this thing. It's a fantastic read now, so don't get me wrong. Like if you got a Twitter account, hop on here, check this whole thing out. But I did want to mention it and say a couple things about this because here's the deal. The Blockchain Backer in this thread, he noted all sorts of crucial support levels that we're at right now. And he didn't say whether or not he thinks we'll see one final dip lower. But he did say that if we see a breakdown in price, it will be earth-shattering because it's such a crucial level for so many metrics that it would just cause, in his opinion, if I read him right, it seems like a virtual certainty. If that happens, it would just cause intense pain, major drops across the board in terms of crypto, like catastrophe, the likes of which perhaps we've either never seen or rarely see. Now, on the other hand, perhaps it's not likely to occur given the historical precedent and given how much of a breakdown we've already seen. And so if you want the specifics for his rationale, I encourage you to just go through and read for yourself. I don't want to just sit here and read this very long. It's an awesome thread, but again, I don't want to sit here and read this whole damn thing. I just thought I'd share with you some of what his perspective is in a general sense. But with where we are right now, and he even looks at fib levels, and if you follow me, you know that that's basically his favorite tool when it comes to chart analysis. And it just, even though he wasn't willing to say which way he thinks it's going to go, and I say fair enough on that point, because if you don't know, you don't know. That's the right answer. And truthfully, nobody knows. Despite what Kevin O'Leary said, where he feels like, no, there's got to be another drop to the, okay, well, maybe there will be another big drop to the downside. I don't freaking know for sure. Of course not. But there's a lot of reason to think that we've already seen the worst of it. The bottom's already in right here. And a lot of analysts that I follow, they do seem to think that that's what's more probable, at least. But either way, like I could not be more optimistic for the long-term viability of XRP in this asset class. So that's not going to change no matter what happens. But I am just as curious as the next person to see how things are going to unfold here. And again, it's worth noting, like I said, crypto has never existed in such uncertain economic times. And in fact, Dan Morehead, who is the founder and CEO of Pantera Capital, which is the first ever cryptocurrency hedge fund in the United States, he points out just how bad things really are. And so that's why, for me, if you look at historically how things have unfolded, okay, that's great. It's good to draw upon information from the past to come to conclusions about what's most probable for the future. But again, we are in uncharted territory. We have never seen this much chaos the world over in so many aspects of life. And I think Dan Moore did a great job expanding upon this idea, and he wrote the following. There's a view that since we're close to or in a recession, we're close to the end of tightening. Somebody's paused a note. What he's talking about right there is quantitative tightening, which is the opposite of quantitative easing. Quantitative easing, that's just, it can be a couple things. It could be the reduction of interest rates from the Fed, but more importantly, it's money printing. Just when you hear quantitative easing, just think of money printing. Solve problems. What's that? We don't have enough money for stuff. We'll print more money. That won't cause inflation, right? No. Don't talk about doubling or tripling the money supply. There's no way that could cause inflation, could it? A whole bunch more dollars chasing the same or fewer goods? There's no way that could increase inflation, right? So that's what we're talking about when we're saying quantitative easing. So now what the Fed is engaging in is called quantitative tightening. And what they've been doing recently, they've done it 3 times this year so far, is increasing interest rates. And in doing so, you reduce economic output. It's basically like, and they won't word it like this, but they're intentionally trying to cause a recession. Not that they want a recession, but the alternative is endless runaway inflation because they have debased the dollar so much. So what they're trying to do here is increase interest rates so that fewer people will take out loans. So you can think about it. It could be personal loans. It could be loans for business, which means less economic growth because it's more costly to take out these loans. And the more you increase interest rates, the less you get of those types of activities. That's what we're seeing right now. And again, crypto's never lived in a world like this before. And so, again, Dan Morehead says there's a view that since we're close to or in a recession, we're close to the end of tightening. It doesn't work that way. The Fed's mandate is not keep tightening until you cause a recession. The mandate is full employment and stable prices. It's it's way off on both. And I'll just note this too. Effectively with employment rates, we're as close to full employment as is possible, but that's actually not what he was getting at, as you'll see in this next tweet. I just wanted to be clear on that. There's still an employment problem. Okay, it's not just runaway inflation here. There's actually an employment problem, and here's why. So check out what Dan Morehead wrote. He said, the labor market is way too hot. For the first time in history, there are 2 job openings for each person looking for a job. 11.2 million job openings and only 5.9 million unemployed people willing to work. So let's pause. There's not enough humans to do all of the jobs. This is really something. This is really something. That's why I keep saying, I don't know. I just don't know, what's going to happen directionally in the short term with crypto, because this is a wild card situation. You don't know if something's going to just result in markets tank. And forget crypto for a second, because again, this is a crucial thing to understand. Crypto markets they have historically, and I think for the indefinite future, will continue to move with stocks, for example. So if something causes markets to get spooked, you're talking about the stock market, crypto's going to move in tandem. It's moving in tandem with all this stuff here, which is why there's so many unknowns. Nobody knows what the hell's going to happen. That's the truth. I'll say it. I don't know how many others. Some people like to pretend like they're wizards and they speak with such confidence. Oh, they must really know what they're talking about. Blah, blah, blah. Maybe use some big words. Blah, 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 blah. I don't freaking know, and they don't know for sure either. Which is why I honestly appreciate the blockchain backer's approach, which is, I don't know. But he's analyzing and saying, this is interesting and curious. We'll continue to track, but man, there's no way to know for sure. That I appreciate. And then Dan Morad continues. Inflation climbed to a 41-year high of 9.1% in June. Unfortunately, inflation is closer to 12.9% when using a real-time measurement for housing inflation, the Case-Shiller Index, in place of owner's equivalent rent, or OER for short, a very slow-moving index introduced in 1982. Now, never in history has the Fed allowed house price inflation to go so high above mortgage rates. The previous two bubbles, which were half as big, ended badly. I wish it were, but a recession is not a get-out-of-jail-free card. The Fed will have to keep tightening until the housing and labor markets come off their intensely hot highs. So how much are they going to have to? Like, where do interest rates even need to be? Because even right now, with these 3 rate hikes this year, they're still at historically low levels. So economy is going to get worse before it gets better. That seems like a certainty. So you just kind of wonder, like, when's money really going to start flowing back into crypto in some sort of notable way? Well, look, the people that are long-term oriented, and I won't get into it any further in this video, but I have covered it recently a lot for a reason. The people that are long-term oriented, just individuals, and there's certainly some institutions, the whales out there, they are buying. But it's just with the state of the economy being what it is and the level of fear out there, I don't know exactly what this is going to. Maybe we'll have a unusually long bear market for all I know. I'm not making that claim that it will. I'm saying I don't know. But these are the things that you need to consider. So that's why I'm saying here are the things, kind of like the blockchain backer is doing, but this is what I've been doing for the longest damn time too. So I'm saying that, and then I'm saying just be aware of all this so that you can manage your own emotions and then understand that regardless of what happens, XRP and crypto markets are not going to cease to exist. They're here, right? XRP is functionally useful, and I think it's going to be worth a fortune in the future. And all this crap that happens in the short to midterm, ultimately it's not going to matter. That's my stance. I'm here for the long haul, and I'm willing to bet that if you're here listening to this channel in a freaking bear market, which is where most think we are right now, if you're listening to paying attention to crypto right now, you're part of the minority. But that's what it makes sense to do. So I have a feeling that you're not going to have as much trouble as the typical retail investor out there if you're paying attention to this level. But it is what it is, and we're all just going to learn together what the hell happens. Truly interesting times. I'll tell you what, whether it's good or bad, what happens next, you cannot say it's boring. That's for damn sure. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.